now. But for the time being, let's take stock of what's happening in the commodity markets as well. Manisha is joining in. Manisha, what's catching your attention at this hour?
Well, energy markets clearly, because the major moves seem to be coming in here as well for 2025 at least. Remember, the crude oil prices fell for straight 2 years in 23 and 24, but 2025 has started on a positive note. And even as we have seen prices slipping from its 3-month highs, remember, we did see prices gain up by 4.5% in the previous week. We did see 3-month highs last evening in New York session, where the crude oil prices hit $77 a barrel. But from there, we've seen a bit of a decline coming in. And the reason is the weak economic data that the street saw yesterday coming in from US and from Germany as well. That has weighed on. And then there have been various reports putting out concerns that you could be looking at oversupply from non-OPEC countries in 2025 and demand may not catch up. And then there has been a Goldman Sachs report suggesting that the Iran oil production and exports could decline in the second quarter once Trump takes office, and there could be more sanctions on Iran. Is the reason you have 76 still holding when it comes to the Brent prices. Also supporting prices is the fact that Saudi Arabia yesterday came out with an advisory saying that they will raise prices for Asian consumers from the month of Feb. So that tells you that the demand perhaps is going to go higher as we get into the new month. The street as of now is watching out for policies from incoming Trump administration. And until then, you are looking at volatile prices. But having said that, the start to 2025 has been on the positive side. So even as you saw the Brent prices decline by 3% in 2024, they are trading 4.5% higher right now in 2025. And then it's all about natural gas prices. I mean, this clearly has been the hero in the previous year as well. We saw prices gain up by 63% in 2024 for natural gas prices. And then overnight, we've seen 10% of gains come in for prices yet again. This is because there is forecast of colder weather in the Western world. There are reports that US could see the coldest January since 2011. So the crude and the product demand is expected on the higher side. Well, there also is export demand on the stronger side. Also, when you look at the US LNG plants, they are looking at more export coming into the market, and that has been supportive for prices. All of these markets, though, will watch out for dollar index, where we've seen prices decline from 109. And then it is going to be about the US jobs report that comes in on Friday. Until then, it's going to be volatile.
All right, Manisha, thank you very much for that.